The local exchange continues to feel the pressure. The all-share index fell over 2% to a more than 2-month low of 74,800 points on Monday. This is the fifth straight session of losses in line with major bourses. Well, the head of foreign exchange execution at Rand Merchant Bank is Matete Thulare, joining us now to dissect these early market moves. Mr. Thulare, thank you very much for your time. Let's start with the Rand. It seems to be trading firmer again today. What's the outlook on this, perhaps looking at the week?
Good morning, Tolly. I suppose the Rand yesterday testing our support line of 1810 as broad-based dollar weakness hit all currency markets yesterday. Now, the banking crisis in the U.S. with SBV falling over, that has caused investors to rethink what the Fed and their current interest rate hiking trajectory might happen. Early this morning in Asia, we already saw a lot of emerging market currencies all in negative territory. There's fears of contagion, they're mounting, and it's already bringing fears from 2008 back into the fold, where we saw the banking sector being hit. But the focus all today is about the U.S. CPI numbers later this afternoon, where the market will actually be looking for clues as to what the Fed is going to do come the end of this month on the 22nd of March, when they have their interest rate decision. This morning, the Rand starts off at 18.23 against the dollar, ahead of some of local data that we do have. The local market, which is obviously the January mining production numbers, and obviously just that is going to be around 1 o'clock this afternoon, and then 2:30, all eyes will be on the US CPI numbers, which is being forecast for 6% in the month compared to January of 6.4%. So it is going to be quite an interesting set of data that we see later this afternoon, which will obviously have an impact on the Rand.
Let's talk Stats SA, which today will release mining production figures for January. What can we expect from those numbers, and what will it tell us about the overall commodities outlook?
So look, the regulatory uncertainty and the inability of the mining industry to transparently and quickly and also efficiently apply for mining and prospecting right in the corruption-free manner has had an investment consequence. Now, the higher commodity prices that we have seen have not resulted in higher fixed investment in the mining sector, obviously owing to the structural constraints that we have domestically. Now, this time around, it's worth attending the numbers to show to what extent the mining production has been affected by the load shedding, and also it will shed some light on the lack of export flows given the logistical issues out at Transnet and also the Rand weakness. Now, don't forget that the economic contribution of the mining sector to the fiscus remains a key source of revenue to Minister Godongwane and his team at a time when we know that the state supplied electricity constraints and also the Transnet logistics constraints there. They're dealing the economy in negative hand. So it is going to be quite interesting to see how that actually plays itself out when we have the numbers released this afternoon at 1 p.m.
Let's talk company news. Transaction Capital, bullish about the prospects of its crown jewel, and that's We Buy Cars. But it's also warning shareholders about some margin pressure. Talk us through those developments.
Look, they came out yesterday with a statement that says obviously they've got a dominance in the second-hand car market, and obviously they're already giving us a warning in terms of their trading update, where obviously, as you say, they're expecting some sort of margin pressure. Obviously, they're expecting earnings to decrease for the half-year end to June. Now, make no mistake that the long-term structural elements supporting the business remain robust, and obviously the business continues to increase their market share. But don't forget that obviously the local consumer is also getting affected given the amount of interest rate hikes that we've had over the past year and a half. Now, they've outlined that their blueprint, which is obviously the We Buy Cars dominant market, that division is aiming for a 15% share of the second-hand car market, which obviously is about 1.2 million passenger cars every year. Now, they've said that their cash cow, which is the We Buy Cars, that is now accounting for 43% of their profits in the year into September. So it just shows you that obviously they are aiming to obviously increase their dominance in that space. And I think at this point in time, their other competitor that is coming to the market is the likes of Bidvest. So it's actually going to be quite interesting to see how those two companies play themselves out in the next year, especially in light of the increase in interest rates that faces the consumer.
Let's talk TGF. It says load shedding has costed 1 billion rand in revenue in its year end to March. Help us make sense of that update, but also the concerns that the group is flagging.
Sorry, as with any other corporate that is releasing results, every time you hear results, everything is around load shedding. I mean, at this point in time, you've also heard the Reserve Bank locally talking about that the impact of load shedding is around 1 billion rand a day on the local economy. Now, TFG, also the Fushini Group, nothing different there. They said that their retail turnover is expected to reduce by about 1 billion rand. Obviously, following the spike in abnormal costs, there's been lost trading hours on the back of load shedding, and also there's been a decrease in the footfall in stores in the 2022 period. I mean, the abnormal costs in business obviously include the inability to pass the cost of inflation to the consumer, and obviously dealing with load shedding. I mean, load shedding at this point in time is obviously something that has made them lose something like 120,000 hours of trading hours. So obviously they've reported in their previous financials that they had about, 70% of their stores were covered from load shedding, and obviously that was due to the group's investment in alternative power solutions. I mean, if you think about last week, Shoprite as well came out saying that they've spent about 500 million rand also in diesel over the past 6 months, obviously to keep their shops, open despite load shedding. So at this point in time, TFG also saying that, look, running independently from Eskom is proving costly for retailers, and they know different. I mean, at this point in time, they've spent around 220 million rand in capex on backup generators, and also incurring about another 55 million rand in unbudgeted costs that, that's relating towards diesel, security, maintenance of these things. So it just shows you that the impact of load shedding is obviously impacting quite a lot of the retailers at this point in time.
Yeah, let's conclude with Capitec announcing that it has reached 20 million clients. It's an incredible milestone for Capitec. How is this company comparing to its peers?
So look, I mean, yesterday the CEO, Gerrie Fourie, came out to say, look, they're cementing the group as the largest retail bank in South Africa by customer numbers, with a client base that is larger than the populations of some of our counterpart countries such as Zambia and obviously Malawi. Now, as you say, it's a milestone celebration for them, obviously reaching the 22 years that they've been in operations for. So the bank has doubled its clients from 5 million in 2013 to 10 million clients in 2019, and from 10 million to 20 million in the last 4 years. I mean, they're now boasting about 1.3 million active credit clients at this point in time. And also, they've introduced a mobile app, which is obviously very incremental and instrumental to their company's growth, noting that has around 11.4 million clients on their apps that use it for daily banking. And over the past few years, just like some of their peers in the banking sector, they're moving into the telecom space, into the insurance space, and also business banking. And I think over the past few years, over the past 10 years, if you just look at their growth, they've actually done phenomenally well.
Matete Thulare, thank you very much for that markets update.